Morning, Stephen in Chicago with the reaction of the USDA July supply and demand report. It was a very interesting report, as always. Though I guess the most interesting thing is you just can't believe their soybean numbers. They raised U.S. soybean acres. They didn't lower the carryout as much as what we're trading. So I just throw those numbers out. But as far as the other numbers are concerned, the corn carryout for this year, 1779, that's in line with the average trade guess. Next year, 1599 is also in line. They actually lowered corn acres, left the yield at 166.8, which we think we're lower than that now, and also raised demand old crop 100 million bushels. So all those things were in line with expectation, and if the yield is lower, prices should go higher. And corn right now is up 8 to 9 cents. In the beans, they lowered this year's carryout to 255 due to higher residual and higher demand. That's in line with expectations. But at the same time, they raised bean acres and kept the yield at 46. That doesn't make any sense. They have a carryout of 425, which is not worth the paper it's written on. As far as the world numbers are concerned, the biggest thing is they increased last year's wheat carryout by as much as 12 million tons. And that increased this year's carryout by 19 million tons. So we have to kind of go through the numbers and find out where they found the wheat. The corn carryout for next year worldwide is 190 million tons. That's down from the average guess of 193. And the bean carryout is down to 91.8, and that's in line with what the expectation was. And last month it was 93.2. As far as the winter wheat and wheat crop numbers, all wheat was estimated at 2148 million bushels. That's exactly what the trade thought, up from 2121 they were using in June. The hardwood winter wheat crop is 866. The average guess was 885, and the soft wheat crop is 393, and the average guess was 400. So now you have people that are out there talking about, hey, if we look at the crop ratings, even if they improve on Monday, you're looking at maybe a corn yield of 158. And you look at the ratings on beans, and even if they improve 1 percentage points, you're looking at a yield of 44. So there might be another premium that has to be put on the marketplace, and then we have to see what the weather is like for the rest of July and into August. As we mentioned this morning, there's less and less people concerned about dryness and heat in August. So at some point in time, we're going to have to find an equilibrium price that shows value of the potential lower yield and what the USDA is saying, but maybe not a disaster. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.